So hopefully you have answers to all these questions now. And we will go through the questions. Okay, so which of these statements is false? So we start off with a purchase transaction usually begins with the preparation of a PO. Well, we know this isn't true because the purchase transaction, we said, usually begins with preparation of a purchase requisition, right? In the individual user department. And this is really step 2. Okay, so we know this one is looking pretty good as a potential answer. All right, B, a receiving report is used to document the ordering of goods. Okay, and you know this is false too, because we know the receiving report should document receipt of goods. So B also looking like a good contender for answer. All right, C, after purchases AP controls are tested for operating effectiveness, the auditor concludes on the achieved level of control risk with respect to this process. So yes, this statement sounds good, and it's not just true for purchases AP, this should be true for every process, right? That is a significant process. So this doesn't sound false to me, so this shouldn't be the answer, which also helps me eliminate this. And D, analytical procedures can be used to examine the reasonableness of AP and accrued expenses. So yeah, again, there's nothing wrong with this statement, and this statement can really be made about any balance sheet account. It's not special with respect to AP and accrued expenses. So not a false statement, so I can eliminate that, and I can go with E, which is the correct answer. Okay, number 2. In assessing control risk for purchases, an auditor vouches a sample of entries in the purchases journal to supporting documents. Which assertion would this test of controls most likely support? Okay, so we have the verb vouches in this question, which automatically makes me think this is a test of existence occurrence, but we know you can't rely on vouch trace all the time to tell you the truth, because sometimes they're used the wrong way. So I still need to read the rest of the question. So I'm vouching entries from the purchases journal to supporting docs. So purchases journal is like the records, and supporting docs is supporting docs. So directionally, I am going the right way for this to be vouching. So it is a test of existence occurrence. So B is looking like a pretty good answer to me. Number 3, an entity erroneously recorded a large purchase twice. Essentially, they have an existence issue, right? This is an existence or overstatement problem. Which of the following internal controls would be most likely to detect this error in a timely and efficient manner? Okay, footing the purchases journal, that wouldn't help me because I'm just going to see the total is larger, but I'm not actually comparing the total to anything. So since I'm not comparing the total to anything, I wouldn't see that my larger total is incorrect. So Control A does not help me. All right, B is reconciling vendors' monthly statements with subsidiary payable ledger accounts. So this sort of means sounds like the AP subledger. And basically I'm comparing how much I think I owe them in the AP subledger to how much the vendor says I owe them in their monthly statement. So this sounds like it could work. And the reason why it sounds like it could work to me is I presume when I recorded this purchase twice, like the journal entry must have been something along the lines of debit inventory, credit AP, or something like that. And I just did it times 2. So in that way, when I compare the AP subledger to the vendor statement, the AP subledger is going to say I owe them $20,000, and the vendor statement is going to say I only owe them $10,000. So B seems like it should work, but I'm going to keep reading to see what the rest of these controls say. All right, C is tracing totals from the purchases journal to the ledger accounts. So since this ledger accounts is coming right after subsidiary payable ledger, I'm going to kind of assume this is referring to the AP subledger again, or to inventory, or whatever accounts that I recorded the purchase to. And the problem here is if I recorded the purchase twice, presumably it is in the purchases journal twice, and it is in the ledger accounts twice, right? So comparing the totals from the purchases journal and to the totals in the ledger won't really help me because they should match, right? They'll both be wrong, but they'll both match one another. So C should not help me. And D is sending written quarterly confirmations to all vendors. Okay, so in theory, this could work because I would send my vendor a confirmation saying, hey, I owe you $20,000, right? And they could reply to me saying, no, you actually owe me $10,000. So this is kind of a maybe, and this is where it comes down to the best answer, okay? So if I'm looking at B versus D, B is a monthly control, D is a quarterly control. The question mentions timely and efficient. Obviously, the monthly control is happening more often, so I would be able to detect an error much more timely. So that's one reason why B is a better answer. But let's talk actually about the more important reason why B is a better answer. So the more important reason why B is a better answer is because I, as somebody working at this company, I am doing B myself. I am able to do B myself, whereas D relies on vendors' honesty, right? So this relies on me to be like, hey, I owe you $20,000, right? And then them to, have this incredible value for honesty in our relationship, and them to be like, no, you only owe me $10,000, right? Because they could very easily say, yeah, you owe me the $20,000. Yeah, that sounds right to me. Yeah, so that's the problem with D. The much bigger problem with D is it relies on the vendor to be honest and to be a good person and to not take that extra 10 grand off your hands when you appear to be freely offering it up. So yeah, B is definitely the best answer here. 4, an auditor performs a test to determine whether all merchandise was received for which the entity was billed. Okay, so what is the population for this test? Okay, so this is another one of these controls where the order in which it is written is really key. So I'm seeing whether all merchandise was received for which the entity was billed. So this assumes I have kind of a complete population of billings, and I want to see if stuff that I was billed for, I actually received. So I'm directionally going in this way. Because the test is, did I actually get the things I paid for? Right? So if I was trying to start with just the things I got, obviously everything I got, I paid for, right? So if I started with this population of what I got, everything I tested, I would see that I paid. So if I want to make sure that everything I paid for, I received, I need to start with the population of things I paid for, and then look at a sample of those and make sure I actually received them all. Now, the other half of this question is it requires you to translate bills into, okay, what is the technical term for this? Which is vendors' invoices. And A is stuff I received, D is stuff I received. So A and D are actually the same answer, more or less. D is technically what I recorded I received. And C is what I paid for, not what I was billed for. So C and B are distinct. Okay, number 5. As an auditor, you are reviewing a summary of control weaknesses in cash disbursement procedures. Which one of the following weaknesses, standing alone, should cause you the least concern? All right, so these are all going to be issues in internal control. The question assumes that. Which one of them is least bad? So checks are signed by one person. That doesn't necessarily sound awful because there's still some authorization going on with this one person. So yeah, so A isn't terrible. B, signed checks are distributed by the controller to approved payees. This is pretty bad because it's a segregation of duties issue. So one thing which I think we talked about maybe earlier on in the course was what a controller does. Which a controller is in charge of financial reporting or has a lot to do with financial reporting. So that's the issue here, is this distribution of checks is a custody thing, and the controller doing it, the controller does financial reporting. So this is the segregation of duties problem. So B is a bigger problem than A. C is treasurer fails to establish validity of names and addresses of check payees. C definitely sounds like a big issue because you could just be, sending these checks to anybody and they may not be real people. So this seems like a big issue. And D, cash disbursements are made directly out of cash receipts. So this makes it sound like there are very few segregation of duties around cash disbursements versus receipts. And especially imagine if you had like a kind of a petty cash, or we're dealing with like an all cash business or something like that, and you weren't depositing the cash receipts first before you then made payments out of that bank account, right? So if you're just making the payments straight out of the money you receive in, the cash you receive in, without going through some kind of process of depositing it first, then you won't have a strong record of the cash you actually received. So this is almost like a segregation of duties issue, and also kind of a good record keeping paper trail issue. So A definitely sounds like the least of all evils, and A is mainly going to be an issue when, as we said, a lot of companies have thresholds where they say, okay, it's okay for checks to be signed by one person as long as they're beneath a certain threshold, like $10,000. Once you get over 10,000, we like to have two people authorizing it. But generally, as long as one person is authorizing it, some type of authorization is taking place, so that's not the worst thing in the world. Okay, last one here. 6, test of controls for the occurrence assertion for purchases is least likely to include which of the following? All right, so first is proper looking at segregation of duties. So this seems like a solid bet for testing occurrence of purchases. Okay, and testing a sample of vouchers for an authorized PO, and testing a sample of vouchers for receiving reports. These both sound good because this is essentially vouching a voucher, right? Both of these. So it's basically the voucher is the basis for recording a purchase transaction, right? For saying it's okay to pay out a purchase, record the purchase. And so they are comparing that to supporting documentation, which would be the purchase order and the receiving report. So these are both kind of describing almost vouching a voucher. So these sound like okay tests of occurrence. All right, and tracing a sample of vouchers to the purchases journal. Okay, this does sound like a test of completeness because it sounds like I have the voucher kind of packet, right? As in I have it in the physical voucher packet, like the supporting documents all together. And then I'm saying, okay, I want to take this one, and this one, and I want to trace them back into the journal /records. So this is completeness. Doesn't sound like a test of occurrence. So hopefully this gave you a sense of whether or not you kind of have mastery of controls over purchases. If you want, I think I do have kind of an additional exercise over purchase controls that is pretty similar to the one in chapter 10 that we did for sales. So I can post that if you'd like something extra to practice with. But this should give you an idea of whether or not you have a good handle on this.